Welcome back to Everything Money. We're happy you joined us on this video. As always, it's Seth, Paul, and Mo talking about stocks. Today, we're talking about tech stocks, Paul. Now, you like these. We're talking about Apple, Facebook, HP, Amazon, and Baidu. We did a Baidu video lately, Paul, this Chinese company, and people were very much in love with the idea that we are interested in Baidu. A lot of people think it's a buy right now. We're going to look at all of these companies, show you the fundamentals behind them, our 8 pillars. We'll go to Trader Mo, that handsome Egyptian over there, and see if people are trading this in our Bid and Ask Patreon Nation. And Paul, what is your take in general about the sector of tech?
I love tech. I think it's the future of blue chips. Like, you know, as time goes on, the companies that were the high flyers, the tech companies back in the, like auto business, airlines, they were the big tech companies from 100 years ago. Now they're the blue chips. Same thing's happening here. At some point, Microsoft, Apple, Amazon, all these companies will be the blue chip companies of the future. So we'll look at these companies. We're not going to do the full walkthrough. We're going to skip right to the 8 pillars tab and look at these 8 pillars. First company is Apple, guys. Typical, checks all around except for valuation. Makes sense. Very high return on assets, very high return on invested capital. 0.6% dividend, great profit margin, all around great. That's the way it is with Apple. I mean, it's Apple, right?
If you're new to our videos, we do look at these 8 pillars: the PE ratio, the profit margin, their cash flow, their assets, shares outstanding, their price. We use these as a general screener. And so if this resonates, keep watching. Go ahead, Paul.
And remember, we don't do any due diligence ahead of time. That's on purpose, because our job, there's 10,000 stocks out there. Our job is to find the ones that fit our financial criteria first. And then you do more due diligence to realize, do I want to own this company because the story is good? If you do the other way, you're going to waste time and make less money. So you have a decision to make. Next company, Facebook. This one's a newer company, but still starting to become a blue chip company, in my opinion.
Newer? How long?
I mean, it started in 2004 and it just went public in 11 or something like that. When did it go public?
Oh, okay. I thought this was like a
it was
standard
pretty recent,
now.
relatively speaking.
Yeah, but relatively speaking,
You're right.
everything same as Apple. High price of free cash flow, high PE. Everything else is decent. Shares outstanding. I imagine this number will be increasing over time. HP, Hewlett Packard. PE very low. Profit margin very low. Assets versus liabilities. Don't know why it's so negative. Pretty decent return on invested capital, return on assets. This might be
This is a magic formula
company.
Yeah, it is. Why do you say that?
Because it's a low PE and a high return on assets.
What Paul's talking about is I invest using the little book that beats the market, a book by Joel Greenblatt, and the magic formula investing finds companies that are currently, what are the 2 stipulations again, Paul?
So what they do is they rank the top 3,500 companies, they rank 1 to 3,500 on PE and rank 1 to 3,500 on return on assets. They add the ranks together, and the lowest numbers get put in that list.
Yeah, this one's been a magic formula stock for 2 years now, and so I've been invested in it for a while. And I'll keep going.
Pretty decent dividend here of 2.7%.
How about Amazon?
Amazon, my homies, my boys. This is like the all-time low for Amazon PE, 57. I mean, it's so expensive. It's just going to be a hard one to swallow. We're going to do the stock analyzer tool on all these companies to see what they're worth. But, you know, profit margin is getting better, and I think it'll get better than 6.6%. because they're switching more to AWS, but they still have a vast majority of sales in retail, and that's a very low margin business. So figure that out when you're going along the way. Baidu. Okay, there's not enough data. We don't have enough data for the cash flow growth, but everything else is, I mean, Chinese stocks are selling for an inexpensive price. My apprehension is always, do you believe the numbers? That's not meant to sound terrible. It's just, that's a reality of Chinese companies, is they have been known for misleading investors with their numbers. We recently bought Alibaba because Charlie Munger trusted the numbers, and if it's good enough for Charlie Munger to trust the numbers, I will do my own analysis to determine things. So, guys, these are the 5 companies. While Mo goes to the charts, I'm going to put them all in Stock Analyzer tool. It'll tell me a range of what to pay for them, and it's a good starting point. If the prices are within the range, then we'll sit there and say, time to do more due diligence, read the 10K, go see what's going on with the news, what the scuttlebutt is, etc.
Baidu's fallen in half since February.
And that's the other thing. Baidu was $360 a share, and now it's $166, more than half. And if I told you 3 or 4 months ago that it would fall in half, you'd have said, you're crazy, Paul. There's 10,000 stocks out there. You will find the ones that will fit your criteria. All you need is 20 or 30 or 40 good stocks, and you can crush the market if you're patient.
If you want to ride the up and downs and trade these stocks with Mo and the Bid and Ask Nation, our Patreon tier, Mo, tell us what folks are up to. You can join Mo in the mornings at 9 a.m. when he goes live, and you can join him right now.
That was a good segue because...
Not so good. Keep going, Mo. I love you.
Well, I'll make it a good segue.
Please do, because I'm struggling.
Apple is in the Employed Trader series, and this is one of those stocks. So right now, I'm zoomed in so far because this is all-time highs for Apple. And you can see they're just consolidating, going sideways, but they're just starting to every day just trend down a little bit. And I know right now they have crossed under their 25-day moving average, so now they're getting that negative pull on them. So I'm not saying that Apple's going to come down and whatnot, but it's not something that you want to get into until you get a ton of volume and a ton of pushing forward like this to make new all-time highs. I personally don't think that Apple's going to do anything big until maybe we see some of the numbers that come out from the new iPhone in September.
How about Facebook? I know you share pictures of your cats in your garden on Facebook.
I love Facebook. It's I just am on Facebook all day.
Yep.
Mo doesn't even have a Facebook account, kids.
You and my mother. Go ahead.
I don't have Facebook.
Your mom's on Facebook, Seth?
Oh, the baby boomers love it, Paul.
I'm joking.
The baby boomers do love it.
They do love it.
So
I mean,
this is a downtrend for sure. And actually, this is probably looking like a good short now. To short something like Facebook, you got to have balls of steel. But there's your resistance point. I mean, there's your support line right there.
face balls of steel.
Yeah, I mean, this is not something that I would short. But if you want to do something with Facebook, why don't we just go to a daily chart? Now you can get into shorting, but even then you're going to get held up at some moving averages. But just follow your trend over here on a daily chart. I would not be shorting Facebook just because it's ran this market all the way up. It's one of the fangs, obviously. So it's going to run this market higher if it goes higher. That's just what we got. What's the next one?
HP, baby.
HP. I like HP. I remember looking at HP. Okay, so this is good. So right now we're just on the bottom, going sideways. I would love to see this thing turn up into the sweet spot, move up to what I assume these are all-time highs, or at least 2-year highs, and just start making some green candlesticks moving up. This is definitely something to throw on a watch list right now. So if you keep a watch list at home, put HP on there to go long. Amazon. I'm going to show the gap, the gap that happened on earnings.
Ah, that's right. 10%
Last week,
fall. Yeah.
So that was a very big gap down. So guys, even companies like Amazon, these gaps down based on earnings can happen. So right now it's just consolidating. I don't think it's going to drop any further than it is right now. I think we're going to get to the bottom here and we'll start swinging up and you'll be able to fill that gap to the top side. So again, throw this on a watch list to go long, but you're going to have to be very patient with this one. It's not going to happen overnight. Last one.
Can you get Baidu over there?
I can. Let's see if it shows up and translates. BIDU.
BIGPO.
Let's see if it translates. Because sometimes these stocks don't translate well. Okay, it works. And man, look at how it's just been beaten down. So it came down. This is a great short. Came down through the sweet spot nicely, just like when you're going long. Came to the bottom, goes sideways for a long time as the price decreases. So this just shows you that shorting is exactly the same thing as going long. When you're recognizing patterns, you're just flipping the chart upside down. But for now, another watch list stock. Look where we're at. We're just starting to make that very slow move. Eventually, you'll start getting engulfing candlesticks. I have a feeling that you're going to start turning green around $180. So this goes back to buy high, sell higher. Don't get in now if you're trading it. But let this thing get into the sweet spot. There's a couple of, 3 watch list stocks here?
Yeah.
That's great.
If this resonates with you, you can join our Patreon. You can join the Bid and Ask Nation. And that Bid and Ask after hours chat is the sexiest Discord thread out there, I guarantee. Paul, would you like to show us what patrons will get with the software as well, with the stock analyzer tool?
So guys, the stock analyzer tool, we have a low, middle, and high assumption range. We want to give you 3 prices to kind of keep track of, plus a multiple of earnings versus cash flow. As you watch more videos, if you join our Patreon, you get this tool, you can watch the video to explain it. You'll understand more and more about how this works. Now, pause the screen, look at the assumptions we're making here. I am being conservative, that is my goal. First company up is Apple. I don't believe Apple is going to grow as fast as it did in the last 10 years, even though their growth has been increasing in the last 10 years. What do I know? I was wrong about Apple before. Who knows what happens? Hit the Analyze tool, Analyze button. I have a price of between 60 and 180, big range, based on your assumptions. Now, if you think my assumptions for revenue growth are too low, let's go 9, 12, and 15%. It still makes the stock overpriced. That's my point about Apple. So I'm looking at Apple in the low 100s, probably where I want to buy it at. That's just off the cuff what I believe just by looking at these numbers. Next company, Facebook. Again, Facebook had massive revenue growth. I'm not going to assume the same thing because as a company gets bigger and bigger and bigger, it is harder to grow at higher rates of return. So we look at these things, pause the screen, take a look at these assumptions, hit the Analyze button. all right, Facebook might not be terrible at this price. It might be a stock you want to buy here at 360. So we're looking at this going, okay, we're right here in our own sweet spot. Now, does that mean you're going to buy Facebook for sure? No. But if you like my middle assumptions and you think it's reasonable, they have a high return on invested capital and assets, you might want to pick up some shares and maybe sell puts along the way to buy shares at future prices at a lower price.
How about HP?
HP. I'm not doing big growth rates for HP. They're probably making acquisitions to drive their revenue. It's a very tough business to grow naturally. I'm putting low rates of return. They're going to give you most of your return by buying back shares at a low price. Analyze button. Yeah, I'm buying HP. Mo, add that to our list of stocks. I mean, it looks like a buy here if I assume all these numbers are correct.
Look at that.
Yeah, I'm assuming the lowest end.
I think we currently have puts sold on HP.
They actually own HP right now. I have to go double check.
There you go.
But I want to buy more shares. It's potentially good money maker. We've done research on HP before. We kind of like it. It's a staple. It does a lot of good things. It's just, I'm willing to make this bet on HP.
How about Amazon?
Amazon, again, big revenue growth numbers. Right? I don't think that's sustainable. Their biggest growth area is AWS, but that's not even close to the majority of their, it's like 10% of the revenue right now. Does it have a lot of growth potential? Absolutely. But is it going to go to $500 billion in revenue? I don't know. Bottom line is you hit the analyze button. It's just expensive. On the highest of highest assumptions, it's a buy right now, and you're only going to get market return for the next 7 years. Okay? So it's just expensive overall. Do I think it's probably in the low teens? I mean, mid-teens? Yeah, probably. I just don't think there's a lot of growth. But this is a 7-year analysis, and 20% growth. They did $400 billion in revenue last year. So 20% for 7 years at $450 billion, that'd make them $1.6 trillion in revenue in the next 7 years. Is that realistic? I don't. $1.6 trillion in revenue. $1.6 trillion in revenue. The U.S. right now does $22 trillion in total income every year. Is it possible? Yeah, 7 years from now, the world will look. I just don't think it's a probable situation. I'm actually probably in the low teens on this one. I mean, probably, I used to say 800 or 1,000. Maybe it's a little bit above 1,000. You might think I'm crazy, but it's a big company, guys. It's selling for 57 times earnings. You usually pay a premium when earnings have when growth potential is huge. What's the growth potential when you're already a $500 billion a year revenue business? It's hard. Last company. Baidu. Again, pause the screen. Look at these assumptions I'm making. I'm making what I think to be conservative assumptions. All right, so it's not far off from our lowest level. It's at 166. Our lowest level is 150. So I think it's probably a buy right now. As long as you believe the numbers and you believe these numbers here, then I think a Baidu is a buy.
Yeah, other people in the comments were saying that as well. They definitely agree with you. So that is our take on tech stocks. We looked at a lot. We definitely like HP. And we'll be doing more of these comparisons in the future. If you follow along, we definitely do a lot of individual stocks. But I like these comparisons to see the way companies are stacking up against each other. So if this resonates with you, join the Patreon. As always, fondle the like as we fondle Paul's belly and his love handles, which are going away, Paul. You're looking very svelte of late.
You know, it's funny. My weight's actually up.
Really?
Yeah.
Mo's weight is up because he's working on that back. Oh, look at that, Paul.
I have muscle too. Don't be hating.
Yeah, but not back muscles like Mo.
I like back muscles here.
Let me see. Okay. Maybe.
I work out 3 days a week, mother, whatever your name is.
That's our take on Paul's muscles and tech stocks.
Muscles.
Follow the thumbs up on the way out. We'll see you next video. Thanks.